Hi guys, it is Pila here. Today I want us to look at the Australian dollar versus the US dollar. Let us look if we'll be able to get opportunities. And if it is your first time you come across my YouTube channel, do not forget to like and subscribe. And the first few people who are going to comment with their problems, I'm gonna solve them. Whatever that you need, I'm gonna assist you with. All right. Remember, I said whatever you do in the market, make sure that you start from higher time frame. So let's look for opportunities here on Australian dollar versus the US dollar. I'm on 6 months chart right now. I just want to see where the market is. But based on what you see on 6 months chart, what is it that you see? A resistance. The reason why I see the resistance is because of this candlestick. This candlestick shows me that here we have a resistance based on the wick. Hope you can see this is the body, this is the wick. It looks like this on this time frame. Yeah? So it's easy for me to see or to spot what is happening. So what I'm going to do, I'll just go down with the time frame to see what is actually happening. Or else if I don't go down and go extra mile, to check almost everything. If you check here, that's what we get. You had a trend line that was broken. Here's your touch. Here's your second one. We're supposed to get the third one. The market went down, the market went up. In this time frame, they did not come back and test. We have hopes that they will come back someday here and respect somewhat this level. But now there's nothing that we can do on this time frame. Instead, we will go to 3 months chart. We want to see what happened here. Into 3 months chart. This is our 3 months chart. This is the resistance. Remember, don't trade something that is not visible. You see here you have a visible resistance. The market came back to the same resistance. Okay. Therefore, you know that, okay, here I have a visible resistance. The market might respect the results of the right hand side. Again, now that you know that the market is currently on the resistance, we're supposed to be looking for opportunities. Whether the market's going to come to this breaker structure, it is still fine. We're supposed to be looking for opportunities that will be pushing the market down. Therefore, we move to monthly. Remember, before going to monthly chart, I want you to remember on the higher time frame, you have a breaker structure. Fine, let me remove it for now. You have a support. Let's use this one. Yet a support that was broken. This is the support here, and then it was broken here. They went down, they came back to test the broken support. As resistance, they pushed the market down. Now they are currently back to the same zone. Remember, if we erase, I said when we trade support and resistance, we need to mark it as a zone. So this is our zone. This is our zone. The market is inside the zone right now. Again, if you check, you can still mark this one as your resistance. That was broken, that needs to be tested. Because if you check, this is monthly, it comes from your left-hand side. If it comes from your left-hand side, it means here you have your support, again. So it means the higher the chance that the market will go down. It means the higher the chance the market will go down. As the higher the chance that the market will go down, we're supposed to be looking for opportunities that says that the market must come here. Again, let's get more information that we need here. Do not forget to like and subscribe if you find this information useful. You look closer, you can see that here you have a trend line. Here's your first time touch. Here's your second time touch. The second time touch, it is visible. And then the third touch that was supposed to happen here, it did not happen. The market respected what? The resistance that is on our left-hand side. The market went down. As the market went down, it decided to change the direction here to go up. As we are going up, they left a continuation pattern that was not tested here. So what am I expecting from where the price is right now? The market to go down a little bit and go up before coming down here. This is where the market will then change the direction and go all the way up. Let's get more information that we, yes, that's what I get on monthly chart. That's the information I get on monthly chart. Therefore, we can go to weekly. Always remember, guys, rushing to buy, rushing to sell is not important. What is important is to understand what you are doing. You must understand what you are doing, and then you must be you must be sure with your interest at some point, because if you're gonna make mistakes, then you're gonna have problems. You're gonna have problems. If we continue moving to the downside, what is it we get? As we are continuing to the downside, you have let me adjust the trend line there, and then unfortunately on weekly chart, the trend line that you see here that did not have a third touch there, it had the third touch here. Based on what I get on weekly chart, everything is accurate. Can you see that? The importance of going through all the time frames when you analyze. This is the fourth touch. They tried going up and then they continue to the downside up until here. That was enough for a trader here. It's okay. Now the market, as it was going up, they left this continuation pattern here. And then they went all the way up to that minor break of structure because it is inside the trend. They came back down a little bit with that red candlestick that you see here to test the continuation pattern. They went up. I said when we trade support and resistance, we focus on two touches. You can see the visible touches there. And then the sign that when they come back to this level, they will break. They gave us here. As you can see on the right-hand side, they decided to break. Now, I want to erase again. What else do we see now? The market is currently there for the third time. It means we can't do anything there. Why? Remember, I said when we trade support and resistance, we need this touch and this one. Therefore, if the market continues to the downside, we will take decisions as the market is moving down. We can't do anything there. Already, the important touches happened here. Ama-touches ekuwona esiwadinga kakhulu enzekile laphayana, so there's nothing that we can do. Therefore, it means we move down. We want to see now what happened on the third touch, because if you also add a trend line there, you'll see that you just got your third touch, and then the market changed the direction. This is weekly chart. So let's move to daily. We are on daily chart right now. Let me erase everything so that whatever that we do here, it will be easy. Here we go. And then that's our third touch there. They tried to penetrate the third touch, but eventually they went down. Now, hence I said that the market is trying to push down because of the resistance on a higher time frame. What is it that we're going to do? You get your trend line. The trend line here has several touches. Actually, it's just three. That's good. Just three touches the market went up. Now, we are on daily chart. We remember what happened there. The market supposed to continue going down from the higher time frame of which is 3 months, 6 months, 3 months, and monthly. So what we're going to do here, we move to smaller time frame of which is going to be our 4 hour. We want to see what happened on 4 hour chart. This is my 4 hour chart. You have many options. I'll show you what you can do here. Right now, there's your trend line. Right. This trend line that you see, there's your first time touch, there's your second time that continuation pattern caused the market to react here as it was going up. This continuation pattern caused the market to react as it was going down. Where is the market going now? Back to the trend line. Once the market hit the trend line, you know that you have to take another decision again to sell. Again, you know very well that should it happen that we break the trend line and go up, wait for them to come back and test so that you can buy. That's it. That's what you do. All right. We move again that we are on 4-hour chart. We now see that, okay, on 4-hour chart, you can see that the market is going towards the trend line. Let's go to smaller time frame to see if we do have more confirmation that confirms that you're gonna sell there. We go to 3 months. On 3 months, I have to adjust the trend line. I apply my line chart. I get a breaker structure, of which is that one. So once I get that breaker structure of mine, it means the market must go back to test the breaker structure, right? Hence, you can see, let me remove the trend line above. If you look closer here, you had a resistance here. The market went down. It went up. The resistance was broken at the horizontal line. We are expecting the market to come back and test the broken resistance as support. The market came back. It went up. The market went down to this support. It went back up. You can see this week. It went back up to test the break of structure. That's what is happening here. Now, what is it that we're supposed to do then? We move to 2-hour chart. Already we have two confirmation, trend line, 2 touches. We are waiting for what? Entry. Good. Now, those who are trading break of structure, they are patiently waiting for their entry here as well to do what? To push the market down. It means the higher the chance that the market will go down because of we have traders that are trading the breaker structure. And then if you look closer again, I want you guys to go extra mile when you analyze. Don't just jump in and buy. Don't just jump in and sell just because of you feel like. Remember, I showed you that the market will show you that it is about to change the direction of the market. The market will give you a certain type of structure that you need to observe before you take your decision on the right side, right? So now looking at the structure, the market was creating higher highs, right? And then it decided to break this. I said, whenever we're going to break this one and go down, that's a sign that we have changed the direction. Isn't it that the market was just going down, up, I mean, it was creating something like this. The market was creating higher highs, right? Once we break this one and go down, this will pose as our minor support. The market's supposed to go back and test the break of structure so that we can sell. Now, in scenarios like this, your job is to observe what happened before the break. That's it. The reason for you to check for what happened before the break is what will cause the market to spike before it goes down. They're done. Therefore, what do you do now? Looking at this, we move to 2-hour chart. On 2-hour chart, let's apply our line chart. This is valid. Can you see the structure here? There's your support. It was broken. It became your resistance there. The market is heading towards what? Towards this broken support that needs to be tested as a resistance. Now, looking at what happened here, the market goes to that break of structure. It won't go down. Even if it will try to go down, eventually it will go up before going down. Or else, if they are not going to do that, this is what they will do. Those who don't have experience in the market, they will be in a position whereby the market will not respect the sleepy area. It will go up before going down, completing the whole structure. Remember, I even made an example that when the market is about to change the market, the direction, you will see something like a Quasimodo pattern, of which is what will be created here. Therefore, we change the time frames as well. And if you do have a question, there is something that you do not understand, feel free to ask so that I can assist. So moving to 1 hour. On 1 hour, you see there's a continuation pattern, it looks like. Someone might be confused that looking at that continuation pattern, there's a candlestick that went inside. Talking about this candlestick, this one. That candlestick went inside. Look, let me zoom in so that you guys can see and understand. Pasting. I want you to look at the base. I want you to focus on the base of the PCP and tell me ukuthi iqala kuphi iya kuphi. Ayini uyayibona? This new candlestick livule kuphi? Livule inside the base. It was not tested. It opened inside the base. Candlestick lelana livule somewhere here. And then it went up or down. The body of this candlestick ivule somewhere here. Even if it went up earlier, it's still fine. It is inside the base. What we take is that this candlestick is ovalala. And then this candlestick that you see here, livulala, and then it goes up. Then that's when it is tested. Uma ingekho kanje, it is not tested. This is inside the base. I said when we trade a continuation pattern, we cover the whole candlestick, including the wick. Right. Let's move. We're moving to 45 minutes, still fine. Now, the reason why I want to move as far as 45 minutes, it is because of we do have people who are trading on smaller time frame. And also, I want you guys to see what happens here. If the market continues up, what do we have? A support here. Can you see the support? They will respect the support as a resistance. That will depend as well on what are they going to do as we are pushing the market up. If they will left a continuation pattern, they will push the market to the continuation pattern and push higher to the trend line. The next thing they break, they come back, they move. That's how the market moves. You must learn to move inside the zone with the market. That's it. That's what you must do. Once you learn to do this, believe me, you won't have difficulties. Again, now, this is how you approach the market like a professional. Don't just jump in, don't just create opportunities. Let's say you decided to enter a sell. The market goes up. We do have the chances of the market going up. The reason why I'm saying we do have the chances of the market going up, it is because of on weekly, it appears that the resistance has 3 touches. This is our 3rd touch of the resistance, of which is what we do not trade. Instead, we look for opportunities inside or when the market moves away from the resistance level. Hence, you can see the market moved away. This is where we are looking for opportunities. Should it happen that we break the trend line and go up, we will come back and just look for buy opportunities. Because of what does that mean? It means the support that we have here, where the market was supposed to go down, it was validated. The trend line that was broken, where the market was supposed to go down, it was validated. That means the market is going up. There's no way that the market will disrespect both of these patterns. Once the market decides to go against both of them, we are no longer going down, we are now going up. Bear that in mind. And remember, as soon as they break, you don't jump in. You will wait for the market to come back and test. Now, as the market will come back and test, what is it that you're supposed to be looking for? A break and retest. On the break and retest, what do you have? A trend line that was broken, right? A resistant that was broken, supposed to become a support. So both of them now are giving us what? Buy opportunities. It means the higher the chance that the market's supposed to go up after they have broken the resistance and the trend line. Now, if you enjoy how I analyze the market, please do not forget to like and subscribe. And if you do have a question regarding what I am doing here or what I did, feel free to let me know in the comment section.